I start the recording and I share my screen. And also, if I have only 30 minutes during this session, okay, so it's very limited time. So because I have other things to do. The market is still open. It's already 9 p.m. and the market will close at 10 p.m. here in Hungary. But US it's around 4 p.m. So I'm in a Central European time. So if I still have time, I will also show to you how I'm going to trade options using credit spread option strategy once I can see a good stock. All right. So okay, let's rock and roll. Okay, somebody mentioned. Okay, where can I find the link? All right, so I have just posted it in my Facebook page right now, and that is the link. It's there in my Facebook page. So I have just posted it here. So please just join if you would like to, and if you have time. So this is a global market, guys, and you will really learn how I am trading here in this market. So there is a little bit difference with the Philippine market. All right, so let's inspect the trades that I did. So this was the setup actually yesterday. Today, the Herbalife already went up with 4.6%, guys. So in one day. So I'm actually sitting with profits, but it's not the time for me to take profits because there is no sell signal yet, according to what I see from the current price action. So I don't want to leave money from the floor. So alright, so let me check. Okay, somebody wants to be admitted. Okay, I'm admitting Christian. Christian, welcome. So I'm glad that you're the first one to join this online session with my Open Portfolio 2021, where you can learn from me directly with the live trade. So you just keep on following, guys, if because this is a 1 year. This is one of my experiments for this year. That's how it will. All right, so let me explain to you the thought process. So, okay, I have some technique to screen opportunities and look for those which are really great opportunities in the US stock market. And this was the setup yesterday. As you can see, I'm really looking at just the daily chart. It's the first. And I am looking for squeeze setup, which is indicated by this indicator, marked with the yellow red. Here, red dots, that's squeeze. Squeeze means, just to walk you through about the concept of the squeeze. The squeeze, guys, it means that the price action is really in a very narrow range, and then the tendency of this kind of setup is that it will explode. So since it's too tight, there is a big energy which is stored, which must be released as soon as possible, or sooner or later. So with the expansion or explosion of energy, it can lead to price spike in either up or down. So we do not know yet. When I say squeeze, it doesn't mean that it will only move up, move down. So I have a way to determine which direction. So during the time that the squeeze is setting up, I am placing my trade, and you can see here this is the daily squeeze, and then also using my pivot central pivot range, which is very tight. See this is the pivot. This is the monthly, so it is set into monthly pivot, and I would like to buy a stock where the price is consolidating above pivot if I am bullish. If I am bearish, I want to buy a stock when the price is consolidating below the pivot. Okay, so it's not so hard to understand. Also, as you can see here, yes, this candle was yesterday's candle, and this is a bullish engulfing candle. The price engulfed this range, these black candles here, which are a little bit small candles. So this one is really multiple times compared to this candle. So that is surely an engulfing candle. So an engulfing candle, bullish engulfing candle, it means that the buyers are very, very strong and dominant during this point of time. So that is one point. And there is a squeeze, and the momentum indicator is now indicating an above zero momentum. So it is only showing to us that after the squeeze, the firing of the squeeze can be moving upwards. So now we have all the elements here that I am looking for the daily time frame. And also, you will see that there is a trend line, and we see also that there is this engulfing candle testing the trend line. So there might be opportunity to trade this stock once the price break above this trend line, which might be the next day, which is today. So now I am already good at the 1 day chart, and I'm fine with that, and I will be looking for the 1 hour chart, because the 1 hour chart will help me to time my entry. So yesterday, this was the setup. We have the engulfing 1 hour, and then consolidate or pull back a little. It's even above the 25%, the 80% range of this candle, so that is quite bullish. Also, this is in a weekly pivot point, so the right side is monthly pivot point, the left side is weekly pivot point. So what I want to see from my 1 hour chart is that the 1 hour price action is above the weekly pivot point. So this is qualifying that criteria that I am looking for. Plus, the pullback is just pulling back above the R1, then bounce. See here, this is the bounce candle, this is the Doji candle and the bounce candle. So it means that there was selling with small volume. There is a possibility that this stock will still continue to move up. And then you see here the green volume started to rise. This was yesterday, guys. So these alone are already pointers for me that there can be a breakout the next day because of this piling up. The volume is rising. So if you compare this volume, last 2 hours volume compared to this, they are about 1.5 to 2 times. It's quite huge. So there is buying interest in this stock. I don't know what really happened at the background, what is the catalyst, but if I have the chance to evaluate, I'm looking at the news. So the good thing here with this trading view, by the way, if you would like to subscribe to the trading view, I can send you my referral link. So I am using a premium subscription for this because it allows me to have 2 time frames in my dashboard. If you have only the free version, you cannot have these two windows or two charts in one screen. Also, if you do not have a premium version, you cannot organize your watch list into folders. So a lot of benefits when you have that premium. So I can send out my referral link if you would like to subscribe to me. Okay. All right. So another thing that I would like to see from my 1 hour chart is that I would like to see also the compression of the central pivot range. So as I see, the central pivot range is quite tight also in the weekly, tight on the monthly, tight also in the weekly. So that's quite nice. So when the pivot ranges are tight, it's also denoting that there is a potential up move with this price spike. Let me check if somebody wants to join here. Okay, nothing. Good. All right. So what happened the next day, which is today? Okay, let me check. Okay, so I see also here that there was no squeeze at the 1 hour, but the 1 day squeeze is already more than enough. There's no squeeze, but as you can see, the TTL squeeze indicator, which is also a momentum indicator, started to print the blue histogram, which is firing to the upside. So this is quite nice indication, and we are about to break about this trend line. Okay, so the next one is this one. This is the ABC wave. So the ABC wave contains purple, the blue, and the red. So if all of them are above the zero, it means that we should be trading only the upside. And it's convincing for us that the bias should be upside because all of the short-term, mid-term, and the long-term uh, trend are pointing to upward. So there's no way for us to short this. Okay, so only up. Okay, so what happened now? So that's what happened today. So at the opening, first hour, engulfing candle breakout. So breakout, and then if the candle closes way too far from the breakout point, that is an indication of bullishness. So continue. Now we are at 52.46. I guess I have an average price at around 49.5. So I'm sitting now with profits. I do not have a sell signal yet, but I have already uh, moved my stop loss at 51.5. So just below the weekly R5. So basically with this at the weekly basis, if we are considering only 1 hour time frame, this price has already exceeded the R5. So most of the time stocks are just from R1, R2, R3, R4. But since this is a squeeze setup at the daily, so there is a potential to still move higher. And beside that, we actually considered the week squeeze at the daily time frame. So this is the daily time frame. This is the squeeze, and currently the price is just trading above the R2. So when there is a squeeze, expect that price can still move to R3, R4, or R5. So the daily, but if it is going to R3, R4, and R5, we can have a system that we can slowly take our profits at R3, one fourth at R4, and another one fourth at R5, but you keep on moving your stop loss every time it's reaching another pivot resistance. All right, so it's pretty much clear how I am trading this, right? So again, there is no sell signal for me. Even if I am profitable, you see that I'm not taking my profits yet. But I am trading my stock in order for me to lock in my gains and then never turn the profits into negative money. All right, and so I will keep on holding this until there is a sell signal. And again, since the squeeze was found, the daily chart, then I'm looking for this R3, R4, and R5 as my take profit points. And I will slowly scale down my position. Alright, so that is HLF. Now I can show to you. So this one is much more profitable than the HLF. Because I could position it at a nicer price yesterday. and then there was a gap up. So yesterday, this is the situation. There was, and the price is above the pivot. The, so let's start first with the daily. There is a squeeze. Momentum is above at zero, and potentially will move upward. The setup is in actually like a bulls-like pattern, so quite nice. Also, the current price yesterday was above the pivot, but not above the R1. If it is above R1, so it means that it has already made some move somehow, and if there is no squeeze and the price is already at R1, the tendency is to move back, pull back, and gravitate back to the pilot point. So it's very, very important for us to trade when there is a squeeze because we have more upsides. The risk and reward is very, very attractive. So also, I see here a pivot compression. Central pivot range is very tight. Squeeze momentum is zero, and the 1 hour chart pivot price is above pivot compression also. Pivot range is tight. Uh, TTM histogram is above zero. In the long term, in the mid term is the long term and short term are above zero as well. However, the short term, the mid term is still at zero. So it's not 100% perfect or not a perfect signal, but if, as long as the long term is really above zero, then you added the short term above zero, then that's gonna be fine. So not the perfect signal, but it's still, if you add all together the parameters that I'm considering, this is a high probability trade. So what happened? Boom, and then went up at about 3.5% now. So I'm now sitting with profits. And again, there is no sell signal for me yet. There is a squeeze. Actually, if you are familiar with technical analysis, you can even measure what is the target by checking this pattern. So the flagpole can serve as your uh, profit target. So you just extend it to the breakout point, and that will be your profit target. But I'm not using that now. I'm just using pivot points as my target. And there is a squeeze, and as I told you, most of them, these prices can reach up to R2, R3, R5. Since it's daily, I will consider my take profit points of the daily. Momentum goes above zero, so everything is set. I'm just holding and won't take profit now, even if I'm sitting with profits. But instead, I can move up my stop loss, maybe somewhere below or around 19.10. So I will be doing it today before the market will close. Right, so the third one, guys, is L. As long I'm not sure if it's already significantly moved, but yeah. So far it's still trading sideways. Even if so, yesterday it went, it rallied from the pivot up to the R2 and pulled back to the midpoint of R1 R2 up to the pivot, and then I entered the trade somewhere at 39.7. So still consolidating, but all the price action is still okay. It did not even go below the EMA 21, so I'm good with this. The long term and the short term waves are still above zero. The midterm wave is just very close to zero, so I'm still not getting out of this. So still I'm not moving any stop loss. Stay on the trade. There is a squeeze. Who knows, tomorrow it might go above this R1 of the daily pivot. So total. So by the way, so I'm actually profitable 1.80. So this is already a profitable trade somehow, but I'm not taking any profit, uh, and also not moving my stop loss because I need to uh, wait until it's setting up another consolidation box. All right, so that's pretty uh, good for today. So actually, that's all the three trades, and we just keep on following this. I think my next live session will be on Thursday. So today is Tuesday, Thursday. So there's no new position, but maybe I have time now to look for a trade where I can show you how I am going to trade with option, and it will be I will be using my paper trading account here, and I'm going to show you for those of you guys who are interested to trade or learn option. I'm going to show to you now how I am doing it. Correct. So, but first you need to start. Okay. So, so yeah, limited runs, since it did not really go up too much, we can use this stock for our option trade. So, you know, option trade basically you have these contracts, option contracts. There are two kinds, the puts and calls. If you are buying a call option, it means that you are betting that the stock will move up above your strike price at the expiration date. If you are buying a put option, you are betting that the stock will move down below your your chosen strike price. Or, in general, you are betting that the stock will move down because you can actually choose a much far away or out of the money strike price. So the point is that you are betting that the stock will move down at a certain time period. All right, so now that we have these limited brands, and I am bullish with limited brands. I believe that limited brands after 1 month, so since I'm using a monthly pivot here, pivot points, I believe that within 1 month, limited brands will stay above this pivot point because I'm bullish, right? So it should stay above this. So it can either be R2, R3, R4, R5, or it can even stay here as long as it is above pivot point. So how am I going to express my trade into an option? So, and the good thing here is that what I'm going to do now, I'm not going to buy a call option here, even if I am bullish. Okay, I'm going to show. Okay, wait a moment. So I can also show you how to buy a call option with this limited brands because it is in a squeeze setup, and most of the time, if there is a squeeze setup, the price of an option is cheap. Then when the squeeze will fire, then the option price will increase dramatically and we make money. The other way to trade option with this is to use credit spread. Credit spread is not about buying calls or puts purely, but it's about selling an option. And out the proceeds about for that selling, if you sell an option, if you sell a contract, you will get paid from someone else who bought that option. It's like you are selling a life insurance. Okay? But what I'm going to do now is it's both selling an option and then buying a protection for that. Okay, so here's how I'm going to do. Firstly, I'm buying a call, okay? And we will follow it on the next upcoming slide, how it performed, okay? So I will be buying now. So I will buy an around 0.7 delta. So the delta option means which strike price I'm going to choose of limited brands. So how am I doing it? So open the interactive broker, and that is this option trading. type in limited brands. But for those who would like to follow the screen, you just check the link that I have posted in my Facebook page. So this is limited brands, and I want to buy an option which is more than 1 month expiration. So if today is January 5, I will get like February 19th, the regular next one. 45 days option. Okay, so I will use this strategy. As you can see, by the way, the implied volatility is quite low. So when the implied volatility is quite low, it's good for buying option. So this buying call is perfect strategy for this. And as I have said that when there is a squeeze, most of the time the implied volatility is quite low. So it's good to buy option instead of selling. So let's buy option, okay? And maybe in the next live session, I will be showing you how to sell option or create credit spread strategy. So now we buy option and which one I'm going to choose. And I told you that I'm going to choose 0.7 delta. So let me show first the delta because I'm not able to see the deltas here. So where is it? The Greeks, it should be Greeks. Sorry for that, I was not prepared that my screen doesn't have the Greeks. Okay, anyway, I think it will take too much time to find it now, so we don't have really enough time. So let's just choose a little bit in the money option. So buy bot point is 38.6, so let's use 38 as a strike price. So I believe that after 45 days, these limited brands will be higher than its current price. Okay, so we will be buying the call option 38. So this is call. The left side, the right side is our puts. So I buy 38 strike. So there is a bid of 4.15. The ask is 4.3. I will buy the middle. Let's try first with 4.2. I cannot see the way. Only so I want only to buy one contract. Okay, so let's try 4.25. By the way, the break even if you buy this is 42.55. It means that after 45 days, the price of the stock should be more than 42.55. But if it will just close at 42.55, you are just break even. You don't really profit from this trade. So you will get profits when the price of the stock is about 42.55. But actually, in the reality, we are not waiting until expiration if trade is profitable within 4 or 5 days or even 1 day. So most of the time, if it's really profitable well enough than our expected, then it can take profit even during the day as a day trade. Or but in this one, I'm expecting that more days, like 1 week. Okay, so let's open the trade, but I'm not sure if we will get filled. So let's check. I'm not getting filled now. So in reality, I'm just waiting for like 15 minutes, 20 minutes to get filled. And if it's not getting filled, I'm raising my bid into higher one. So for the purpose of demo, just let's just have it filled as much as we can. So let's buy the ask price. Still not. So let's get some snapshot. So okay, so the snapshot tells us really what is the real current price, bid and ask, because there is some delay in data. But we are paying some small amount to use this snapshot feature. Still not. Okay, now it's get filled. We have bought. So because we pushed our price into the ask price, we bought the ask price, so we immediately get -10 as a loss in our. So the best is really to bid in the middle. Okay, so that is the best. And then just be patiently waiting. But the purpose of demoing it now and just trying to buy the ask price, right? Okay, so this is limited brands and I will only risk around half of this market value for 436. So basically, I'm just willing to lose 50% of this value, and I can set a stop loss. So if the average price is 4.45 or 46, I mean, then my stop should be put at around 2.22, right? So, and if you are trading option, you always need to know what is the risk that you want to take in every option trade. Okay, so by the way, okay, just fastly, I just want to show to you how to create a credit spread. So earlier I showed to you how to buy an option, and now I can show to you how to sell an option, and this time I will be selling a put option. So if I believe that the price of the stock won't go below 38, I mean won't go below 37 in the next month, then I will, I can put a trade using this still 45 days, and I will sell a put option 37. So I believe that price won't go below 37. So I choose 37 because we have here really a key support level. So we'll use that as a kind of anchor point, such that if the price goes below 37, it means that the trend has already changed. It wants to go lower. So, and of course, if you are just selling a call option, I mean a put option, you will have unlimited loss if ever the price goes below 37 and more. So to protect my portfolio and to limit the risk, I will buy far away or out of the money put option, let's say at 35, to limit my risk. Because here, this one, it will have a really unlimited loss if trade will go against you. And in trading, you always protect your consider risk. Okay, so I will now, earlier I bought the 37, I mean I sold the 37 put, now I will buy 35. So this is called an option strategy called credit spread. So uh, instead of having unlimited loss if the trade goes against us, my loss will have only a max of 200 because of that what I did now. Okay, so let me put my bid at the middle, so around 0.5, and let it just be filled at the end of the day. So if the price of the option will stay 37 at the end of 45 days from now, then I get this $50. So if it is quite small because we only trade one. So if you want to risk more, like you want to risk 400, then you can double your contract. But now I don't want to double. So if this 200 is just enough. Okay. So there you go. Static field. Maybe later it will get filled uh, before the market close. Right? So that's it, guys. I hope you learned something today, and watch out for my next live about my open portfolio 2021. You can learn from it. For those of you guys who would like to learn stock trading, the US market, and option trading as well, even in the Philippine market or Forex, then feel free to contact me because I can help you with that. Right? Contact me and I will send you all the details. That's it, guys. Good luck to all of you. Happy trading week. Till next time. God bless. Hey guys, kumusta kayong lahat? Especially to my kababayan sa all over around